My partner of 7 years registered our best contracts under a parallel company he controlled alone. I found out from a confused client with an invoice. What I found when I started looking was a betrayal built with years of precision. There are partners who build with you with one hand and dismantle with the other, who are in every meeting, who sign every proposal, who celebrate every contract as if it were a shared achievement. While in parallel, they quietly build the version of the business where you do not exist. Not in the future, in the present, with the same clients, with the same projects, with the work both of you did together redirected toward a structure where the profits go to one place. My partner had been doing it for at least 2 years. I found out because a client called confused. And that confused call was the thread that when I pulled it dismantled 7 years of something I thought was a partnership, and that turned out to be, in its most honest layer, a vehicle someone was using while building their exit. My name is Rodrigo. I am 41 years old. I am an interior designer specializing in commercial spaces, and for 7 years, I had a partnership with a man named Marcos who was 43 and who is the kind of partner who on paper makes a partnership work. He brought in the clients, managed the commercial relationships, negotiated the contracts, while I handled the creative direction and project execution. It was a division that had worked because we were complementary in what each of us did well. That complementarity, I learned, had also been a vulnerability, because Marcos managed the commercial relationships. I did not always know exactly how he managed them. The call arrived on a Monday morning. It was Carlos, the administration manager of a hotel group we had worked with on 3 projects in the previous 4 years, and who was one of our most consistent clients. Carlos called the company number, which I answered because Marcos had not arrived yet. He told me he had a question about an invoice that had arrived the previous week from a company called Marcos Corporate Design that he did not recognize, for an amount corresponding to the second payment of the lobby renovation project we were currently executing. I told him I did not understand what invoice he was referring to. He told me the invoice had the correct project details, the correct contract number, and came with the bank details of an account different from the one they had always paid. I told him that had not come from our side, and not to transfer anything until I verified what had happened. Carlos thanked me and hung up. I was left with the phone in my hand and a question that had an answer I did not yet want to fully formulate. Marcos arrived 40 minutes later. I said nothing about Carlos's call when he arrived. I told him I had work to finish and that we would talk at noon. Those 40 minutes before he arrived and the 2 hours until noon that I postponed the conversation, I used to do something I should have done before, but had had no reason to do. Review. The first thing I reviewed was the public company registry. I searched the name Carlos had mentioned, Marcos Corporate Design. It existed. Incorporated 2 years and 3 months ago. Sole partner, Marcos with his full name. Business purpose, interior design and commercial space renovation. The same business purpose as our joint company. Incorporated 2 years and 3 months earlier. While we were partners. While we worked together every day. The second thing I reviewed was what I had access to in the internal project management system we shared. I searched for Carlos's hotel project. The original contract was registered under our joint company, but there was a note in the file, added 6 weeks earlier, saying, billing transferred to MC per client agreement. MC, Marcos Corporate, a note I had never seen because it was not the area I managed on a daily basis. I started looking for similar notes in other files. I found 4 more. 4 active projects with billing transfer notes. 4 of our biggest projects of the current year. I stopped. I closed the system. I poured a glass of water. And I stayed in the office kitchen for 5 minutes doing what needs to be done when you receive information that reorganizes something you thought was one way, giving it space to settle before acting. When I went back to my desk, I called my attorney. My attorney's name is Eduardo. He has spent 20 years in corporate and partnership law. I had consulted him on minor things before, but never anything at this level. I described what I had found in 10 minutes. He listened without interrupting. When I finished, he asked me 3 things. Whether the original partnership contract had exclusivity or non-compete clauses between partners. Whether I had access to the company's complete accounting or only parts of it. And whether there was any client who could confirm having received communication from the parallel company. I told him the partnership contract had an explicit non-compete clause that prohibited either of us from operating businesses in the same sector during the term of the partnership. That I had access to the accounting in theory, but that in practice Marcos managed it with the external accountant, and that I signed the financial statements without having reviewed them in sufficient detail. And that Carlos could confirm the invoice situation. Eduardo told me what I was describing was a direct violation of the non-compete clause and potentially a contract aversion that in legal terms had a name and consequences. He told me that before any confrontation, I needed solid documentation. He told me I needed to get access to the complete accounting from the previous 2 years before speaking with Marcos. Getting access to the accounting was the most delicate step. I had legal right to it as a partner. But requesting it suddenly after years of not reviewing it in detail was going to generate a signal. Eduardo suggested a way to do it that was legitimate and would not generate immediate alarm. Requesting a semi-annual financial review meeting with the external accountant, which was something partners could request at any time, and that sounded like ordinary management. I sent the accountant an email that same Monday. He said he could meet with me on Wednesday. The Wednesday with the accountant was revealing in a way that exceeded what Eduardo and I had anticipated. Not because the accountant was part of the scheme, but because when I reviewed the accounting with the attention of someone who knows what they're looking for, the pattern was more extensive than the 5 projects in the internal system suggested. There were invoices issued by Marcos Corporate Design that appeared in the accountant's records as client payments that had never reached our joint account. There were clients that appeared in our system as completed and closed projects, but who, according to the accountant, had made final payments to an account that was not ours. The accountant, when I pointed it out, had the expression of someone who sees something they should have seen before and who does not know exactly what it means that they did not see it. He told me Marcos had told him those transactions corresponded to personal projects separate from the partnership, that he had recorded what Marcos indicated. I told him those projects were not personal, that they were company clients redirected to a different entity. The accountant apologized. Eduardo would speak with him formally afterward. By the end of that week, I had a file that Eduardo described as solid. 17 projects over 2 years with evidence of contract aversion to Marcos Corporate Design. Total amounts representing approximately 40% of the income our partnership should have generated in that period. For clients who confirmed having received invoicing from the parallel company. The public registry proving the parallel company had been incorporated in direct violation of the non-compete clause. I called the meeting with Marcos for Friday afternoon. I told him we needed to talk about the company's financial direction, a reason that sounded ordinary. Eduardo was present. When Marcos arrived and saw Eduardo, his expression changed in a way that told me he knew exactly why he was there. Eduardo presented the file in an orderly way and without drama. Marcos listened. He did not deny it. What he did was something that surprised me in the moment, and that over time I understood as the response of someone who had calculated this conversation and had his position prepared. He told me he had built Marcos Corporate Design as a planned exit from the partnership, that he had been thinking for some time that the partnership was not working the way he needed, that he had preferred to build something of his own in parallel before having a dissolution conversation he knew was going to be difficult, that he did not see it as betrayal, but as planning his future. I listened to him say that. Planning his future. I told him what he called planning his future had a legal name, and that name was contract aversion and unfair competition in violation of a partnership agreement. That the clients he had redirected to his parallel company were clients we had built together with both our work. That the projects he had invoiced through Marcos Corporate Design were projects I had executed creatively while he kept the billing. That was not planning. It was appropriation. Marcos said his commercial contribution to those projects was the reason the clients existed. Eduardo presented the non-compete clause and the legal detail of what the violation implied. The conversation that followed lasted 3 hours and was the hardest negotiation of my professional life. The partnership dissolution process lasted 4 months. I'm not going to go into the details of the financial agreement because they form part of confidentiality terms. What I can say is that Eduardo built a position that took into account the value of the diverted clients, the damage to the partnership's cash flow over 2 years, and the compensation corresponding to the violation of the non-compete clause. Marcos had incentive to reach an agreement because the alternative was a legal process that was public and that would have had consequences for his reputation in an industry where reputation is the most important asset. We reached an agreement. I came out of that partnership with something that in the first days of the process, I was not sure I would be able to retain. The clients who had remained with the joint company during those 2 years and who, when they understood what had happened, chose to continue working with me. Carlos was the first to tell me explicitly that he worked with us for the creative work and that was mine. That mattered more than I expected it to matter. I have today a company that is completely mine, smaller than what the partnership was at its best, but with a clarity about every contract, every invoice, and every client that I never had in 7 years of partnership because I trusted that the other party was handling that part well. That trust was not necessarily naive. It was the reasonable trust deposited in someone you have built something with for years. What I did not know was that trust was being used as the condition that made the scheme possible. And that is the hardest thing to process of everything that happened. Not the betrayal in the abstract. The precision with which it was built using exactly what I did not review, because I trusted. What I want you to take from this story has very concrete parts for those who have or are thinking about having a business partnership. The first, read your partnership contract. If you do not have a non-compete clause, put one in. If you have one, understand exactly what it says and what it covers. That clause was what gave legal structure to my case. The second, review your company's accounting regularly and directly, even if you have a partner who manages that area. Not out of distrust, as responsibility. You are a partner, not an employee. The accounting is yours too. The third, know your clients directly, not only through your partner. A direct relationship with clients is what allowed Carlos to call me when something did not add up. If the entire commercial relationship had only gone through Marcos, that call probably would never have happened. And the fourth, when something does not add up in the numbers or in client relationships, investigate before asking. Investigating first gives you real information. Asking first gives the other party time to prepare their response. If this story shook you, comment. Do you regularly review your business accounting, or do you trust your partner to do it? Like if you believe a business partnership requires full financial transparency. Subscribe for more real stories. Share with someone who has a business partnership and has never thought about these risks. Practical tip. If you have a business partnership, establish from the beginning direct access for both partners to the accounting and financial statements. Consider hiring an external accountant who reports to both partners independently and not just one. And periodically check the public company registry to verify your partner has not incorporated entities that compete with the partnership.